Good evening, everybody. This is Johnny Seville from Acorn Wealth Corp, and this is your executive summary. Now, look, we've got a very important day today, of course. It is Open Range Day. So today the market sets a very important milestone or kind of measuring point for where we go for these first few weeks of October. What we really want now, well, firstly, what we want to see ideally is we want any kind of extra bullish action or short squeezing to be soaked up by open range, and just like we talked about at the end of before open range last time, we said obviously last week, on September 15th when we closed above open range, we said what we really want is the market to go up and go a little higher than have a bearish close. What did we get? Exactly that. And that meant that we then had a beautiful drop because it closed below that, below the top end of that resistance. So what we want here is basically something very similar. We want the market to kind of rally up and hit this. You can see what we've got here. We've got our 20-day moving average right there, which is at 1945. Now, we closed, so basically we want to see the market kind of squeeze up, tag 1945, and then sell off from there. So those of you who like to play the puts on the SPY, as we start to hit that 1945 area, could be an interesting place to look at some puts that expire next week, for example, at the end of next week. And look at, for example, SPY. Let's just look at where we'd be kind of looking at. So we say we kind of go up to 19.4. So basically looking at, some 190 puts, for example, could be a really interesting way to play that. Very speculative, obviously, but if we tag into that, we should see a sharp sell-off from there. So that's what I'd be looking at, kind of some 190, even 192 puts on the SPY as we that expire at the end of next week. So there's something interesting. We can also observe that there's a possible head and shoulders developing there. So again, we're just looking into the way the market's appearing. Got to be thinking that there's that type of possibility. So that would be a descending neckline, head and shoulders, which would be a rally up again into this kind of 193.60 area, and then we'd measure the neckline to the head. We can look at that potential drop. That would be taking us down essentially to 176. Again, we'll go back to the S&P. Internet connection is just plodding along here. Okay, so we could look at the where that would relate to on the S&P. Just pop that little guy in there. Okay, then we can measure from the neckline down once again. So you can see that would basically drop us down from 18 to down to 1780. Now, what's the relevance of 1780? Of course, well, remember this little line that we drew back then. Remember that would be the flag. That's the flag extension from that bearish flag. So the bearish flag extension takes us to essentially the exact same point that this potential bearish head and shoulders is. So we'll be looking at basically 1780 as the target on the S&P 500, and that plays out. So again, what we're expecting is probably about a 20-point rally up into that area of resistance, and as soon as you spot the top, or as soon as we start to come into this area here, again, let's just look at the levels. So basically you see we're coming right into this area here. So I'd expect this to kind of top out right in around 1940 or just under, and then from there down is what we want. Now, looking at the S&P futures overnight, we are up about exactly 20 points. That's exactly how much we were up last time I looked. So I mean that's a very kind of magical number, because that tells us that that's already filling in the gap to that right shoulder. So pretty cool stuff, really. Now let's move on to have a look at some of the stocks in review. Now some of the newer ones is what I'll touch on. HUM is one of the stocks that I'm not yet positioned in, but I'm looking at puts on. This has got this was brought up in Trading Room on Thursday, and this could be Tuesday. This could be just a beautiful little play. If I wait for the breakdown here, a break below 170, and I'd be looking for a $40 drop there. So that's over 20%. So I like the sounds of that. It's HUM for you, and I'd be looking at the 150 January puts, or just shorting the stock outright. And again, my target would be about 133. So looking at the low of this candle, we're looking at 131, the high 133. So yeah, 133 would be my target on that one. Okay, so excuse me. Okay, so 150 Jans. Target 133. I'm just making notes, otherwise Kyle will kill me if I don't keep writing these prices down. Alright, and we could probably be a little bit more sensitive in terms of the break. We could probably look at a break of about 172. Just juice a couple of extra bucks of profit. QLIK, like this one. Also something that has got... this is why I'm not really too concerned about the rally in the market, because we've essentially just rallied straight into resistance. I'll show you a couple of stocks that are in the newsletter in a second, and you'll see that it's all just gone right up into resistance, which makes an opportunity to actually take on shorts if you've missed any of these. But QLIK, again, you can see this big drop, rallying into resistance. I mean, I'd be happy to take this short or look at puts anywhere underneath this 9-day moving average at 37.55, or of course if it breaks down below the 200-day moving average. So we want to sell resistance here, or sell resistance when it breaks that support level. QLIK looks good, and I'd be looking at kind of the $32, 30 or even $33 puts. Again, trying to go out closer to the January-March area, closer to March if possible. I haven't looked at the option chain on that one, but that's what I'd be looking at. But basically some puts around that $33, $32 dollar price. Okay, so the next one, now this one we've already mentioned. HUM we've already mentioned, I know as well. But CDK we've mentioned, but this one looks great. Now this was one that we sent out earlier in the week as an option trade in the text message alert as well. We've talked about it throughout the week. I mean, this is just rolling over beautifully. Didn't experience much struggle at all in the market here. I mean, I'd be looking at a stop loss just above $50, but this one could just plummet. And it's got oops. It's got some excellent weakness to it, and we can see that it's just starting to break down under the 200-day bearish candle. Money flow coming right out. I'd expect big things from this, and it's at $48, and this could drop down all the way to 22. So you could get significant performance out of that. AVGO also looks like it's completing its head and shoulders, rallying up into the area here around 126. So also one that could be a shorting opportunity in terms of entering that. We obviously talked about that last week about the 105 puts that were about $8.60. So I don't know what they're priced today, but that's still a very valid trade. I'm already in this one, but I like this a lot. Okay, so we talked about QLIK, CDK, SSP's done great. This has had a beautiful rally. This is up, $17, almost to $18 over the last 2 days. I'd be looking to take some profit here though, as it runs into this moving average, somewhere around 18.26. I'd I'd look at taking profit and maybe re-enter. I don't want to take new positions at the moment until looking for totally new stocks that aren't part of longer term strategies until we've printed open range. The big opportunity is going to be coming Friday, Monday to either take some speculative longs or shorts depending on where the open range goes. This is a market for making money. There's no need to take extra risk by trying to gamble ahead of open range. Open range is the most important thing in terms of the market direction. So why guess when we're going to have the answers within a day or two? Just don't need to. So SSP looks good. We can also look at CHTR. Charter, one of the newer announcements. Again, look, this is the exact thing I'm talking about. This very prominent support line. We broke straight down through it, and then we're rallying back up exactly to this area. So again, CHTR, perfect opportunity, I think, for a positioning in anywhere from here up to maybe tagging below this moving average around 178. I mean, these things are just kind of really going off, and I think that if the market plays out the way we want it to, we're going to make another bundle of money. But look, don't get overly excited. I'm obviously excited, but I mean, don't let it play into you. Don't take stupid risks. Don't risk more than you can afford to lose. And remember, when you're buying options, you can lose it all. So I'm just taking nice, small, comfortable positions in a lot of these different puts. So and just building that arsenal. And when I'm up 300, 400, 500%, taking profits. So I traded these like the stocks, but some of these are these longer term patterns, and these longer term levels are just looking great. So look, this is the executive summary, and everybody, do watch your email today as we are sending out the membership access details that I mentioned in Trading Room. So watch your email today. You'll have the link to click to gain access to the open range day trading and the open range strategy and the and advanced order types and all those things we talked about in the Trading Room. You should have that email giving you access to that information coming out today. So we're very excited. We'll see you all in Trading Room, of course. But in the meantime, happy trading, and may the open range lead the way. Take care and have a great day.